You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Wednesday, March 21st, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story of the day is from investing.com. Top 5 things to know in the market on Wednesday. First thing to know is Fed rate decision, Powell press conference, both in focus. The Federal Reserve is widely expected to hike its Fed funds target rate range by 1/4 point at the conclusion of its first policy meeting under Chairman Jeremy Powell at 2 p.m. Eastern. That would put it in a range between 1.5% and 1.75%, the highest benchmark rate since September 2008. Powell is to hold what will be a closely watched press conference 30 minutes after the release of the Fed statement. It will be the first time he faces questions from the media as head of the central bank. The Fed will also release new forecasts for economic growth and interest rates, known as the dot plot. The latter has been the topic of market speculation for weeks. The second thing to note is the dollar slips and Treasury yields tick up as traders await the Fed. The U.S. dollar was a shade lower while Treasury yields ticked higher as investors looked ahead to the outcome of the Fed's meeting for fresh clues on the pace of monetary policy tightening for the remainder of the year. The dollar index, which gauges U.S. currency against a basket of 6 major rivals, dipped 0.3% to 89.70 in early trade. It reached its highest in almost 3 weeks on Tuesday at 90.02. The bond market, the U.S. 10-year Treasury yield, inched up to 2.892%. The third thing to know today is U.S. stock futures point to a lower open. U.S. stock futures pointed to a lower open on Wall Street as investors prepared for a likely hike in U.S. interest rates and guidance on how many more to expect this year. The blue chip Dow futures slumped 30 points, or around 0.1%. The S&P 500 futures dropped 3 points, or about 0.1%, while the tech-heavy NASDAQ 100 futures lost 29 points, or roughly 0.4%. Fourth thing to know is oil prices rise ahead of EIA data supply. The U.S. Energy Information Administration will release its weekly report on oil supplies at 10:30 a.m. Eastern, amid analyst expectations for a gain of 2.6 million barrels. Fifth thing to know is Bitcoin and other cryptos rally after productive G20 talks. Bitcoin prices surged above the 9,000 level for the first time in 6 days, as sentiment improved after finance ministers from the world's top 20 economies expressed no desire to call for a clampdown on the crypto markets. The group of 20 nations said on Tuesday they agreed to monitor the movement in crypto while keeping the door open to regulate the booming industry at a later stage. Our second story today is from CMEGroup.com. Oil. Could Iran risk reversed options bearish signal? The removal of Secretary of State Rex Tillerson and replacing him with CIA chief and former Congressman Mike Pompeo has implications for nearly all aspects of U.S. foreign policy, including Middle East relations. More specifically, Tillerson supported the Iran nuclear deal, Joint Comprehensive Plan of Action, JCPOA, whereas Pompeo was one of its fiercest opponents on Capitol Hill. In addition to the recent changes at Foggy Bottom, there are also numerous press reports that White House Chief of Staff John Kelly might be paving the way for the return of National Security Advisor H.R. McMaster to the Pentagon with his elevation to the rank of 4-star general. McMaster has been a supporter of the Iran nuclear deal, albeit a lukewarm one. Among his possible replacements is former UN Ambassador John Bolton, also a critic of the Iran nuclear deal. Our next story today is from Investing.com. Major banks earned more in metals than oil last year. Banks' metals-related revenues exceeded their earnings from the oil sector last year for the first time since 2014, as low and relatively stable crude prices discouraged hedging activity, but this is unlikely to be the start of a new trend. Banks' commodity revenue has been on a steady downward path in recent years, as they have exited or slimmed down their commodity business due to heightened government regulation and a poor performance from the sector. The world's 50 biggest investment banks made revenue of $1.6 billion from trading, selling derivatives, and other activities in metals last year, compared to $1.4 billion in oil, according to Coalition, a financial industry analytics firm. And our final story of the day from CNBC.com. Amazon just passed Alphabet to become the world's second most valuable company. Amazon has passed Alphabet and now trails Apple among the list of the world's most valuable companies. The e-commerce giant rose 2.7% on Tuesday, lifting its stock market value to $768 billion. Alphabet, the parent of Google, fell 0.4% and is now valued at $762.5 billion. While the U.S. tech megacaps have rallied in the past year, Amazon's performance has dwarfed them all, with the stock surging 85% over the past 12 months, including 35% to start 2018. Investors have been piling into Amazon, betting that the company's growing and very profitable cloud computing business will provide the cash needed for investments in original content, physical stores, and continuing to build data centers and warehouses. Meanwhile, Facebook's plunge has dropped the social network's market value below Berkshire Hathaway. Facebook, now the 7th most valuable company, has lost more than 9% of its market capitalization in the past 2 days after revelations on Friday and over the weekend that Cambridge Analytica had misused data tied to 50 million Facebook users. And that, ladies and gentlemen, is news you can use for today, March 21st, 2018, your options news rundown. I'm Dan Passarelli, TradeSmart, and have a good day.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.